What is up, everybody? This is Books of the Stock Market. I hope everyone is doing well. This is the Sunday report where I cover the top articles from Monday through Friday. At the end of each article, I'll be giving my thoughts on how the article could impact or has impacted the financial markets. Without further ado, let's get into this week's Sunday report. On Sunday, Bitcoin rose around 7.4%, while Ethereum hit a new all-time high of $1,476 on Monday. The rise in Ethereum and other altcoins was not out of the ordinary, as Ethereum and altcoins are known to lag behind Bitcoin during the bull market phase. Many people believe that the rise in Ethereum and altcoins caused Bitcoin to rise on Sunday. This article in the broad sense is not so significant, but it does show that people who were saying that it is all over for Bitcoin after it got rejected from 40K were wrong. Bitcoin has slowly recovered from its 40% drop earlier this month. Only time will tell if Bitcoin is able to reach new all-time highs and fully recover from its 40% drop. Over in Europe on Monday, British stocks closed in the red. Analysts believe that this drop in price was due to news of potentially implementing stricter lockdowns. This caused the FTSE 100 index to fall 0.86%. Travel stocks also fell due to the emerging coronavirus strain in London. Although many people believe that a vaccine is able to take on the new coronavirus strain, Boris Johnson does not want to take the risk of another mutation developing, rendering the current vaccine useless. The story is pretty important as markets such as the US markets are pricing in a return to normalcy late 2021. If new coronavirus strains start emerging, it will obviously affect the markets negatively. On Monday, GameStop hit a peak of around $144. For the previous 2 days, GameStop was up 130%. Even with this incredible rise, GameStop's short interest reading of 141% remains solid. This move upwards is caused by a massive short squeeze. The short squeeze has caused shorts around $6 billion in losses year to date. Other heavily shorted stocks like BlackBerry are showing similar price action. It should be interesting how long the short squeeze might last. Other questions I have is whether the SEC will do anything about the situation as both retail and market makers are manipulating these heavily shorted stocks. On Tuesday, the International Monetary Fund raised forecasts for global economic growth even with the pandemic still in play. They raised forecasts because of the many vaccines that were approved and distributed. However, the IMF is still worried about new strains of coronavirus emerging. They are asking for more leaders like Biden to help fund the global distribution of the vaccine. Before this meeting on Tuesday, the IMF believed that there will be a global contraction of 3.5% in 2020. However, for 2021, they're predicting global growth of 5.5%. I believe that last week, the ECB said something similar about a recovery happening, and now the IMF has chimed in and is saying the same thing. With many organizations echoing the same positivity, the financial markets will probably continue to rise as a lot of confidence is supporting the move. On Tuesday afternoon, Microsoft beat earnings, causing the stock to be up 4.6% in the after hours. Big Tech was expected to beat earnings as the pandemic has caused a sudden increase in the need of good technology. Furthermore, with Microsoft beating earnings, many people are looking at other big tech stocks like Apple, Tesla, and Facebook. With their earnings coming soon, their stock price has been steadily climbing in expectation. Since January 18th, the Nasdaq is up around 6.54%. It should be interesting how tech earnings will play out as everyone is expecting them to give good numbers. Hopefully not too much is expected, as if that were the case, then even if they beat earnings, the stock will tumble down. Like yesterday, GameStop continues its incredible run. GameStop was up 92.71% for the day, and another 52.57% after hours. GameStop was halted 3 times today, which is 6 less than Monday. Many Wall Streeters are trying to adapt to these new trading habits. For instance, John Patrick Lee, an ETF manager at Van Eck, states that the current trading conditions are not a fad, but a generational shift in how people think about investing. This rise in price has shorts sweating. As seen in yesterday's bailout of Melvin Capital, shorts are losing incredible amounts of money. This will likely cause them to liquidate their shorts, causing the stock to even rise further. I think the short squeeze was an incredible opportunity, and I'm pretty upset that I wasn't on top of my game and getting into these positions. But for now, I think I'll just label this trade as a missed opportunity and not FOMO in. On Wednesday, Biden's Energy Secretary Jennifer Granholm spoke at her Senate confirmation hearing. During her hearing, she spoke about promoting alternative energy sources such as investing in batteries, solar, and wind power. When asked about what would we do about the lost jobs from the current energy sector, she stated that this would be a once-in-a-lifetime opportunity to transition into new jobs. She was also asked if she is worried about mining for rare earth metals that are necessary for batteries. She answered that the U.S. can mine responsibly. It looks like nothing much happened in the Senate confirmation hearing, so we're likely to see a push towards green energy. If you're interested in some energy stocks, ICLN is a popular clean energy ETF. For rare earth metals, REMX is an ETF that tracks them. The Fed decided to keep rates unchanged. They observed moderate economic recovery, but it is obvious that COVID is still a threat. Furthermore, the Fed believes that the road to recovery will depend on the progress of vaccinations. The Fed also stated they will not raise rates till there is a full economic recovery. Since the start of the pandemic, the Fed has increased its holding by more than $3 trillion. The total balance sheet of the Fed is around $7.5 trillion. With rates unchanged, the stock market dropped. The S&P 500 was down 2.57%. It seems as if the markets were expecting more help from the Fed. But with interest rates almost at zero, did the markets want negative interest rates? I'm not so sure about what was priced in or not, but the market seemed to be expecting much more help to continue this rally. On Wednesday, Boeing posted a record annual loss due to the coronavirus. Their net loss rose to $8.44 billion in the fourth quarter from $1.01 billion. They have lost a total of $11.94 billion for the year. Furthermore, they say that their new passenger plane will be delayed by at least 3 years. This delay means that Boeing will have to rely more on their defense contracts as they are not getting any significant revenue from the commercial sector. This caused Boeing to be down 3.97% for the day. The outlook for the short term does not really look good as they're delaying production of newer models and the coronavirus still has not disappeared. However, if you have a longer time frame, and I mean like 10 years plus, then it might be a good buying opportunity as the airplane manufacturing business consists of mainly two players, Boeing and Airbus. One is an European company and the other one is an American company. I really doubt that the US government will let Boeing go under and lose their market share in the global aerospace industry. On Thursday, the battle between retail and Wall Street waged on. However, it was briefly halted after Robinhood suspended trading on the stock. Between noon and Thursday evening, Robinhood clients could not buy stocks that were mentioned a lot in the subreddit Wall Street Bets. The only thing they could do was sell. A few names in this ban list include AMC, GameStop, and BlackBerry. Robinhood CEO Vladimir Tenev went on CNBC later that night and said that they stopped trading on these popular stocks so that they could protect the investors. However, there were rumors that Robinhood was asking major banks for money. People believed that they did not have enough money to support the trades that were going on. There were also rumors that Robinhood parent group Citadel forced Robinhood to stop the trades. The hedge fund denies these accusations. Interactive Brokers also halted trading, but the most disturbing part of it was the interview of Moon Pt.3. He admits that he halted trading so that he could protect himself and his company. Billionaire Leon Cooperman also went on TV and started complaining about how retail investors were screwing everything up. He even thinks that taxing the wealthy more is just an attack against the rich. I don't know what to say about all this, but it seems like Wall Street does not even care about the blatant manipulation that happened on Thursday afternoon. The worst part of this is that they didn't suspend trading both ways. They only suspended buying and not selling. It's as if they are forcing their clients to sell. This is probably the most obvious form of market manipulation that we have seen in a while. After suspending popular stocks on Thursday, Robinhood lifts the bans on these stocks. However, they do not lift the ban entirely. They're restricting trading by the amount of shares and option contracts a person can buy. They also increase the amount of restricted stocks from 13 to 50. This is devastating to retail traders as volume is greatly restricted. There's not much to say about the story as it looks like this is how Wall Street will suppress retail traders. On Friday, it seems like the markets were expecting better vaccine news than the one delivered by Johnson & Johnson. Johnson & Johnson stated that their vaccine was 66% effective, but the market still tumbled down midday. Markets may have tumbled down due to Europe having vaccine distribution problems with AstraZeneca. However, this was not the most important news. As suspected, all the news outlets were covering the GME short squeeze. As multiple brokers restricted trading, many people are wondering whether to keep their position or not. GME fell during the day but slowly recovered by the end of the day. Similar price action was shown by AMC. For the day, the S&P 500 was down 1.93%. So what are my thoughts on this week? This week just showed that the market is rigged and it is not a free market that billionaires like to describe. Wall Street has always manipulated stocks in their favor, but when ordinary people start playing their game and beating them at it, they start to lose their minds. They limited trading on multiple brokers, and this is clearly market manipulation. However, it wouldn't be surprising if nothing comes out of it, as the SEC will probably only put more regulations on the ordinary people and not on Wall Street. Well, that's it from me. If you like this video, press the like button. If you have any questions, leave a comment below. If you don't want to miss out on future content, press the subscribe button. Thanks for tuning in, and I'll see everyone next week.